welcome everybody. Now, it's been a couple days since we put out the video, and I know that the last time we were here, I was really excited if we had gotten a breakout in the marketplace. And then again, what happened? Well, last week, President Trump came out and said, no, we're going to impose tariffs on China. And now what's happened? Well, it seems the Federal Reserve wasn't backed in a corner politically. The Federal Reserve was backed in a corner, and this is what we wrote in our weekly Thoughts and Observation newsletter, was that the Federal Reserve almost has to lower rates because global central bankers are lowering rates. And what has transpired since then? Well, today we had India lower rates and New Zealand lowered interest rates. So, everyone's blaming this on the situation in China, but is China really going down in their economy contracting because of imposed tariffs, or is it because of other reason? What's going on here in America is that we have at least an improved outlook on economic GDP growth, and again, the main engine of things running is employment. Jobs are being created. So therefore, it's not just a trade tariff war. Yes, all of that may influence confidence and again down the road cause big shifts in how investors feel about the markets. A couple things that are just absolutely outrageous right now is where bond yields are relative. And I started trading bonds in 1982. I mean, most of you don't know this, but my big field day in the market was trading bond, and then when the Chicago Board of Trade, that's right, you guys probably don't remember the Board of Trade because the Chicago Mercantile Exchange bought them out. But at CBOT, they introduced the very first option on a commodity, which was on Treasury bonds. So back then, we had Ron Reagan as president. Bond yields were, something like 8% coupon yield, and we were trading bond options like it was unreal because that was the very first commodity they experimented using options on was the Treasury bonds. A little history for you, so I hope you enjoyed that. Next, what about the market right now? Well, TBT, I think we just put this trade on. I don't know if I tweeted it out, but we just did a debit call spread to 24.26 in TBT for September. I think that's going to allow us a chance for the market to go up. And in my email alert, friends, it said, I think that the equity market is specifically setting up for a bounce out of this low. What I see is we're long BristolMyers, we're long GlaxoSmithKline. I have exposure long position at lower levels from last week in coals. Now from Monday. We scaled in on coals. We have an average price with Monday's lower opening. Our average price is around 48.50-ish. So what do I see? In the month of September, from the month of August into September, that 8-week period, we see biotech drug stocks recover. So we're watching for a breakout in LABU. For me, as I said in the live trading room, and I'll read this because, I got multiple monitors all over. You can't see this when I'm talking, but that's why I don't stare into the camera all the time. But bottom line is we have, just to give you an idea, here is what we said today. LABU. If LABU, and that's the leveraged ETF on biotech, if it has a 60-minute close greater than 41.14, then enter long strategies. You can use an option on that. Stop should be placed under 38.51. Currently, we're at 41.45, and the 60 minutes going to close in 17 minutes at 1:30. So remember, in the ETF world or in the cash equity markets, it's the bottom of the hour. In futures, it's the top of the hour, which concludes our 60 minutes. I see some positive things happening. One, the McClellan oscillator. It's a breadth using a function. It's an advanced decline function oscillator using a moving average component. It is the most oversold since December 20th on a daily basis. So that tells me we're coming up for a dead cat bounce. At least a rally, possibly maybe to fill in, my guess, Monday's gap. 2, the weekly higher time frame is actually near the zero line, so that tells me it's kind of neutral. With all this selling pressure that came into the market, it really didn't go that negative. So that's That's another interesting observation. Third thing I would say is that there's a lot of stocks in price that fell below their 200-day moving average. You know, all these stock traders look at that thing. But what they don't or might not look at is that while the price has dipped, the volume of that price dip is not in line with the sell-off, and they're not below their longer-term moving averages. So I don't just look at the moving average of price, I also look at the condition of the volume of those sell-offs. And stocks that go down with not heavy volume are vulnerable for short covering pops. That's what I'm suggesting, and I think that's one of the cases that we see with bonds right now and a lot of other stocks. Number one, the first stock that I see in energy, with crude oil hovering around $51 right now. Maybe it's got another downdraft, $1.50 in it, but I'm not that opposed to being a buyer in the energy sector on this dip. Occidental Petroleum, blood in the water. Funny thing about Occidental Petroleum, and if I may share this, and I'm going to introduce this next graph with you, and you may think I'm crazy, but I got a lot to go over if you want to hear this. So first and foremost, this is a 60-minute chart, and I'm looking at a graph of how many different stocks in the drug sector are starting to see liftoff. And I've already alluded or let you know that we have a long position in BristolMyers, which is interesting because while the overall stock market is going down, BristolMyers relative to the overall market is seeing an uptick in volume. It's seeing an uptick in our volume indicator, and the PMC indicator is showing its relative performance. It's outperforming relative to the S&P. If we can get this market in BristolMyers to close greater than this swing high, which is around, let's call it what it is, it's 46.11, a daily close above that swing high confirms a maybe near-term little breakout, and it might give us a rise to filling the gap at 47.84. That's very positive. Another one is GSK, GlaxoSmithKline in the drug sector. If we get a daily close greater than this little last conditional change, which is 40.72, I suspect that due to the fact that we have, and this is not a great product to trade, it doesn't really go anywhere, but it's a good harbinger, and it might see some little upside to 41.5 up to 42 in this August-September time period. So let's get back to the original subject matter, which was energy, and I want to look at Occidental Petroleum, OXY. And this is the kind of stuff that we cover in our live trading room each and every day. Occidental, we go back and we look at Occidental. One of the things that we said is, this is the one where Carl Icahn's in a bidding, he's upset, he's suing the board because the board, to raise cash to buy out Anadarko, gave Warren Buffett at Berkshire Hathaway a stock deal and a warrant deal that pays him like 8.5% or 8.25%. Google me on that, but it was over 8% or at 8%, whatever. That's some rich money to get back on your loan, 8%, and the opportunity, I think, the warrant to convert to common shares. So Warren got a really great deal on that, and that just peeved Carl Icahn, who's a major shareholder in Occidental Petroleum. They're an oil producer. Oil goes down, they don't make as much money. Oil bottoms out, they make more money. But the price of this stock right now is at the lowest level not seen since the crash in 2008. We have a yellow line in the sand. This is what I feel there's bloodletting in the market. And this is a great example of what I'm saying. Price is below its 200-day moving average. There's no doubt about it. I mean, it's the lowest level that it's been in since, I don't know, the last decade, like, quite frankly. Where's the volume in the sell-off? It's non-existent. So that tells me that this is maybe a margin call. Someone's under pressure. They bought too much, and they just got, I don't know, they're under pressure. There's bloodletting in the water, so to speak. Baron von Rothschild says, buy it when you smell blood in the waters. We're looking at this not because it's cheap. I'm looking at it because since 2006, it has had enormous strong support around 41. So I don't know if we got maybe tomorrow, which would be Thursday, another follow through, lower gap open, just something that just a margin call liquidation, something brutal. And I'd like to pick up some of the Occidental for a longer term trade. Another idea, and that's why I'm looking at that. Am I picking a bottom? Not with the price action, but I'm picking a bottom with confirmation that I've got a convergence pattern in volume, both the monthly and again the weekly. Here's the weekly chart of the on-balance volume indicator and a proprietary volume indicator that we created especially for ourselves and our lifetime users using the TradeStation package. This is a change of rate of momentum of volume, and again, in terms of percent. Now, when I see this type of situation and a market dropping and there's no volume behind it, look, the volume bars are green, not red. If it was red, that tells you you got a sell signal going on with heavy liquidation. But at this point in time, liquidation was going on probably right here when the price of the stock was at 61. Now the stock's at 44.97. There's not so much volume selling off. So it's getting set up for a reversal in Occidental. So I just thought I'd bring that to your attention. I think other names in the space that a lot of people, it's kind of funny. Here's Twitter, 41.43. A lot of people like Twitter. We made money in Twitter. We got out of Twitter. I'm not in Twitter right now. And I would say if we can come back down, I'll get back in it. But I'm not chasing it right here. I think there's some better values. And I think in this environment, we've got some better setups. What I want to see happen, ladies and gentlemen, is I want to see the advanced decline, which is stabilizing on today's break. I want to see that populate a positive. Stochastics right now is oversold. Like I said, the NASDAQ, the S&P, and even the Dow, along with, at this point, the Russell, which is at massive person's pivot support, while price action with a lot of the stocks and sectors in these markets are down hard and dirty, they're not down hard and dirty with volume. So it tells me that we haven't really seen that selling volume pressure that tells me that this is the real deal, that we're going to crash forever. This market has a real strong shot of lifting to the upside again. So don't lose faith on that. Now, about a week ago, I was real high and mighty about XRT. I said, if it breaks out of this little trading range, man, this thing can really go. Well, let's take a look at XLY and the XRT together. What was I talking about? And if you look back at XLY, I said, man, if we could break out of resistance, which it never did, and then again, it just fell apart. But if it breaks out of resistance, look where the volume is starting to lose its momentum. And the relative strength is not weakening substantially. So I think and then let's go XRT. And here's the funny thing about XRT. XRT needed to see a breakout over that line in the sand. That's why I said if we can break out of that line in the sand, base, sky's the limit. The relative strength is improving. So this was the President Trump debacle. Go back and look at that video and you'll see I was sharing that exact same. If we could get a breakout, this could be powerful. Well, thanks to President Trump, he kind of started initiated this scare with the trade wars. But this is still on. This is still on. We are at a strong support level. We didn't see insane weakness of relative strength, meaning look at these red bars. It's actually turning fuchsia, and the volume never went negative. So this actually has a very strong shot of breaking that trend line and rising to the upside. Is it going to be today? Could it be tomorrow? We have a doji-ish formation right now, friends, and a close greater than that high gives us an idea that we could lift off. Middle of August, which is like next week. I don't know where the summer went. 3 sectors you want to focus in on from a seasonal perspective that we wrote about and we contribute from years ago in the Commodity Traders Almanac with my work was that we get biotech. There is some XOP, not oil service sector, but oil and gas exploration and refiners. They tend to rise in August, September, October period. Biotech, drug sector, and some consumer discretionary. And one of the better stocks I like in this play, by the way, and only from KSS Coles. I haven't liked Coles in a long time, but right now there's something about Coles. I don't know if it's because of the Amazon connection or whatever, but as the stock market crashed, this stock's actually starting to see support in here. So maybe Coles, this could be the time to start looking at exposure to long Coles. All right, that's my stock outlook update for you guys. What about the Algo Optimizer? It's been doing absolutely crazy things. Let's take a look. Today alone, yesterday before that, I mean, it's not just taking shorts only. It takes longs, it takes shorts. So it is absolutely nailing it. And I know we've got a growing community of traders that are just digging this product and enjoying being here in the live trading room, watching these trades populate. So not only crude oil, but even in the E-mini S&Ps. The 15-minute model, while yesterday it was kind of choppy and dicey, it did one trade, nothing. But boy, this thing has just been knocking it dead in the marketplace. So I wanted to point out to you, I think if you look at these, this was the day of President Trump when I had that video that says, hey, this market's recovering. This was Jerome Powell short. That was President Trump, and then the dump. Really catching some great intraday trades. Once again, this is what you see in the algo room. Right now, it's long gold. It's been trading. It's long the ES at 59.62. You're up $300. You can see the performance. It tells you when the trades get in, what the signal is, what the last is, strategy fill time, so our traders can kind of track and trade along with those. So anyway, the overall market, I think this afternoon, when we're looking at day trades, if we can see a recovery greater than the spiders, if we can break out above this 11 o'clock high today, get a breakout over there, and if the advancers of the S&Ps get back above I'm going to suspect 180, 190, and that's what we're going to need to see. If that happens by about maybe 2:30, it really leaves the door wide open for a late afternoon maybe recovery. So don't be looking at selling short if you have the conditions of an improved breadth in the S&P at around that 2:30 time period. I'll try to get this video up fast enough. Hopefully you got some information out that's useful for you. And watch that Occidental. I smell blood in the waters, man, and that's an opportunity for us retail traders to pick off some money against the lows going back since 2006. Thanks for watching.